7, 6, 5, 4, 3, 2, 1. Event has occurred.
Yes, long midpoint reversal. Long midpoint reversal.
Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Good morning. Good. Thank you, Ariel. How we doing in YouTube? Thanks, Stephen, and good morning to you too, and good morning to everyone in Trader World. Welcome to the Trader Lab. I'm your host, Tom B. I stream live Monday through Friday, 11:30 to 1 p.m. Eastern Standard Time. This stream is about integrating Bookmap Order Flow tools with auction market theory, in other words, how the market works, and using a tool called the volume profile for structure in multiple time frames or fractals, subject to how you look at the market. The idea of the Trader Lab is it is a community of like-minded traders who've come together to leverage their collective experience. There's no one way to trade or even a right way to trade. However, there are concepts, if you will, that seem to hold up over time. And the concepts are really different than what most retail traders imagine the trading business to be. And the Trader Lab is really about the business of trading. And if you're interested in the business of trading, I invite you to visit the stream and also take advantage of the resources that are available to all traders, whether experienced or developing. And when it comes to experience, we have the full range from newer traders who are building out the business of trading to more experienced traders. Our senior trader has over 54 years. I've been doing this going on 45 years, both professionally and now as a retail trader. And I think with the collective leverage of a community that is available to everyone, plus the resources, structured trades, statistical probabilities, business models, things of this nature, you might, and it's all subject to your individual, tenacity and doing the work, which, by the way, is work in order to build a potential career in the business. And I always have to say past performance is not indicative of future results, and that all these resources and the Trader Lab community in the Bookmap Discord Trader Lab, and there is a link in the bottom of YouTube for this, is available at no cost. So with that in mind, let's get into today. First of all, we have to do something. Take care of business. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And this is not a trade calling room, though if we do get into real-time market behavior, we will certainly go there as far as sharing observations. And I do recommend that if you are in Trader Lab, like always, that this stream is available exclusively to you to reverse engineer, review, circles, arrows, build out your library of structured trades. Because what I do in the stream is really a broad stroke of structured trades, and these are available to everyone, not to imitate, but to reverse engineer. The whole thing about trading is you can't really replicate what somebody else does. And with lots of us, I think, imagine that trading is do what I do, and I don't mean me, I mean whomever. It really isn't. It's really more about putting together pieces of a story and finding, I like to think of the term, your groove, but it's kind of like a dance partner. Where is your comfort, your rhythm? And the rhythm is determined by something called fractals or rotations. And as day traders, we could really operate in any quote time frame we want. However, the thing to keep in mind is when you execute in the market, you are executing in a rather micro time frame for triggers. And then take it to another level. If you were to put, now I've been saying this recently because I want to get across a concept. If you put 5 different time frame charts alongside each other, whether it's a 30-second, a 1 minute, 15-minute, daily, whatever, and you took the prices off and the time off, they just look the same. That's why trading is fractal. And the way to think about fractals, and I kind of try to approach this from a simplistic point of view. Why make it complicated? It's already random, which creates its own complexity. But Russian dolls, the bigger one and then the smaller ones inside each other. Now, next concept, and I'm going to give you a couple quick statistics, and we'll start with the RTH Open. Now, we had important key reports today. But however, if you've been following the stream, you know 5206 was a key level for us that we had on our chart, and that was the low several days ago, which created a reversal. And that level, which it seems long gone, right, is somewhere down here. This. I think it's there. Hold on. Yeah, this here. And this was the reversal low that we had. So once we tested this, and this is in the intermediate time frame, and we had a reversal, that set up longs only in a higher time frame. Now, when I say longs only, that's higher time frame oriented. But as day traders, we trade inside. And what does the market tend to do? Write this down. Take a couple notes. You might as well maximize the time you get. Remember, as much as I appreciate you visiting, this is not entertainment. This is education. And when you invest time in education, squeeze as much out of it as you can. Come to Trader Lab if you're interested. There is no cost, and then you can review these streams. You can have the support of the community because it's about leverage, posting charts, circles, arrows, etc. So the higher time frame is up. But what does the market do? Write this down. The market goes up to go down, and the market goes down to go up. Now, what that really is talking about is rotations. If the market gets long, there are sell stops under the market. If the market brings in sellers, buy stops then become on top of those sellers. So the market rotates to involve all the participants in different time frames. If we understand the higher time frame is up, we have choices. As day traders, we can just take longs to squeeze the shorts, or we could be taking shorts and taking longs, right? So it's a matter of, that's why I'm talking about fractals and time frames. Now let's talk statistics, and we'll move right along. Grab your pen and paper, take a few notes. You want to maximize what you get from the Trader Lab. We opened higher outside of yesterday's range. Let's call that a gap. And here's your statistics. The overnight volume point of control here. Now here's yesterday's high also. So this would be filling the gap, okay? Yesterday's high, let's start with that one. There's a 63% probability that we might fill the gap or touch the previous high. The overnight volume point of control, which is this is the retail price in the ETH. This is that, which means highest volume. Think shopping. This is what auction market theory is. The purpose of the market is figure out where do we want to do business. And if it's a fair price, like when you go to store and you shop, it's retail. Everybody's doing business. Seller sells, buyer buys. We're all happy. However, in trading, or I should say in the auction, prices change based on perception of value. And if there's a lot of demand at a specific level, wherever it is, if we come back to it, it is possible that if we come back from above it, it might be too low, and then we can bounce off it. If we have a gap, we can come back to the previous day's high and bounce off it, right? Now there's more. You go, really? There's more. This is the settlement price from yesterday, 5303-ish. The ETH low. Let me give you a couple more statistics. Previous high 63%, overnight mid 62%. Lovely. Previous close 48%. That's this, not that. Now we have some more. Now, coming back the other way. Last time we were up here, before we fell out of bed at the all-time highs, we had a naked volume point of control around 53.24-ish, 25. That becomes an upside target. The ETH high, now this is not a reach because the RTH opened here, 76% probability. Past performance not indicative of future results. And remember, the first hour's high, where'd that go? 68% probability. So, and you'll see how statistics might help you. Now, a statistic is only a probability. It is, and here's the joy of trading. We don't know how, we don't know if, we don't know when. But what we want to try to do in trading is put the odds. And why do I use the term odds? Because this is gaming. It's not predicting. So if I could predict, I would know which one or if anyone was going to get hit first. If I know I don't know, then I'm not in the prediction business. I am in the maybe business. Write this down. The outcome of any trade or structured trade or setup, whatever you want to call them, is random. What we don't know, of course, is who takes control first. Now, we had a bullish report early in the morning. I posted actually a trade that I took in there in the Trader Lab early this morning. And it's in there if you want to take a look at it. Myself and other traders in the Trader Lab. Similar trade, similar location, because they're structured. Now, we have a big report at 9 a.m. Central Time. I'm in the Central Time Zone. Now, this is RTH Open 8:30. Now, hold on a second. I got to turn down the... So what happens if you have a big report 9 a.m., we open here in the RTH Open, and this is the ETH high probability. Now, in and of itself, that doesn't mean anything other than what might happen here. So this is called the developing volume point of control. Now, let's assume you're going to have a major report, ISM, right? And 9 a.m. And you get a gap, and you're long. Because if you're in the Trader Lab, subject to how you trade and you're positioned, or if you're rotational trading, you might be long, or you might only be longs, or you might be positioned long. You know, whether you're in options, ETFs, all this is possible using auction market theory. It's all a function, again, of fractal and time frame, right? And I don't use time, I just kind of use rotations. So we can anticipate something called responsive selling. That means responders. It doesn't mean it's the high of the day. It means, let's get some dollars off the table, Lewis. So let's see that. Now, you have a choice if you're in Trader Lab. You can take the short, or you can read the short in an uptrend with a gap, and you go, I want to use the short to get long. This is where your trade plan comes in. So you could be selling this if you're counter trend, knowing that we're in a gap and it's going nuts in front of the report, because you know there will be potentially sellers ahead of the report. You would know this in Trader Lab. So you would either take a short, or you would do nothing here, waiting for the report or whatever, you know, to get long at a different location or other structured trades. I'm just saying this because this is part of a trade plan. And here's the other thing about trade plan and about Trader Lab. You already know what you're going to do. You just don't know if it's going to show up. It's like a bus. So let's label this. This is called VPOC migration, and it is an opening trade, and it is extremely aggressive, And of course, like everything, you have to vet these for yourself. So what I do, I have process. And this is kind of what I do in Trader Lab to help traders understand there's market mechanics. Now, the thing about market mechanics is it's always random and we have no clue. So there's no prediction. But if we understand auction, what does it say? Well, we have liquidity in the book. I have a selling iceberg. I see this. Watch. When I open, this is at 0 and the volume comes in. Now I see a seller here. This is delta, and this is showing me the aggressor. Okay. This is the sell stops coming out. This is a buying iceberg, selling iceberg. So I've got two things going on here. Too high. This is called VPOC migration. Now, this is extremely sensitive on the open. So it starts, if there's little volume up here and there's more here, and you can see there was more selling here. So selling here, where's my buyer? I don't see him yet. So I have buyers here. I see a seller here. I'm going through the minutia. You can kind of see this. This green box is absorption. So it shows me a seller is absorbed by the buyer. So this absorption is this liquidity. I know I'm in the micro. Get the microscope out. But this is how a high-tier tool like Bookmap can help you stay in alignment. Now, it's not buy or sell signals. But if I see seller, this liquidity jumps in the book, it's probably algorithmic, right? I see sellers here. If there's absorption, that's a passive. In other words, it's not an aggressor. It is a limit order. So they're not chasing the market, okay? So I get buyer here, absorbing the sellers. That's what that is. And I get a buyer here. So this is what I have. Sellers here, buyer here, buyer here, buyer here. Too high. Let's just watch the behavior. Mid VWAP. Okay. Now, and remember what we're thinking. Maybe responsive selling. So let's watch. Now, let's talk about our targeting. Now, this is right here, the stop sweeps. So let's look a little further. Notice the liquidity in the book. Notice we have broken away from the retail price. I'm going to label this, by the way, variable high volume node. And the thing that's so interesting about the auction, now there's I don't use indicators because I read the behavior of the participants, and it's really a language. So when you guys use indicators, you're attempting to let the indicator become a translator. The problem is the translator's not here, and it's not here. By the time your translator might roll over, I don't know where you are. But me, I could be short here or here. So these are structured trades in the Trader Lab, and your stop would be above here, this liquidity to start. That's not too terrible in my world. And then there's a minimum 2-lot configuration, the job, and this is all Trader Lab structured trading, right? And you have to vet everything for yourself. But what that means is the job of the first contract is to get you risk neutral. And then you manage the runner. And when we're starting out, what you want to do, remember I mentioned gaming theory. In my opinion, what you want to be doing, VPOC migration. Too high, Lewis. I'm not paying that. Language. Too high, too high, too high. Retail. Liquidity. Kick in the butt. See you later. Catch you later, alligator. Now, let's look at our statistics. Overnight mid is our first target. I know you write these down, and I always kid you guys. 62% probability. Overnight volume point of control, which is the retail price from ETH, is almost 80% probability. That is our target here. And fill the gap. Kind of nice, don't you think? What do you think? Let's look a little closer. Too high. I'm not paying that. More volume here than up here. So think shopping. More volume. Buyer here. Passive orders, There's the order flow, absorption. So these buyers are being absorbed by the sellers. Notice icebergs. See, iceberg. So, order flow. Let's watch. Follow the yellow brick road. I named it Yellow Brick Road, and that's why that's yellow. Wizard of Oz. Yeah, if you guys haven't watched The Wizard of Oz, it's about time. I cannot see the chats at the moment. I just want to get rolling along and get the first trade out of the way, if you will. So let's watch. Pull back to mid. What's too high? So far, it's here. Liquidity in the book, target. Now, this is the report, 9 a.m. So I have to tell you, overnight mid would be it for me. I don't trade into reports. But, so let's watch. You get the report. The report is not as good as they were looking for, blows everybody out. So this here, again, this is subject to your trade plan. For me, managing the trade, that's as far as it goes for me. But this is the target, okay? But again, risk management, job number one. Liquidity resting in the book. I'm going to come up for air now. And if you have questions, let me see what you guys are doing. Thanks for your patience. And again, if you're in the Bookmap Discord YouTube channel, welcome to the Trader Lab. Please give a thumb up if you're finding this interesting. You have questions, guys? Let me take a look. Boy, I'm just reading in the Bookmap Discord Trader Lab chat. You know, a number of traders do these prop accounts, and they're seems like a lot of them are passing using structured trades in Trader Lab. Of course, you know, your mileage may vary, of course, and it's not a recommendation to anybody do anything. But it's always nice to see Trader Lab traders accomplishing their goals. And believe me, it takes a lot of work if you want to be in this business. Why do we talk about statistics, by the way? Why would we even think about that? Because the outcome is random of any interaction, because you never know who's going to take the other side of your trade, who's going to fat finger, who trips over the cord at the CME. By the way, that has happened to me. Literally, not the cord, but CME goes down. And I got to tell you, that's a bit of a challenge. So, now let's talk about gaming theory very quickly. Casinos do really, really well. And why might we use a casino as our business model? How about number one, they're in a random environment. Number two, they have no control over the outcome in the sense of cards coming out of the deck or how the gamblers play the cards. So they are in a completely random environment. However, what they do is they only play games that have a vetted or structural edge. And that means, like blackjack is an example, they just deal the cards the same way every time, whether the gamblers walk out with cash or whether the house wins. Now, if the gamblers walk out with cash, do they change the game? No. How do they realize their edge? Only by playing the game consistently with anchored inputs, not variable inputs. This is what differentiates us, because as emotional beings, we take 3 losses in a row. We're going to maybe skip the next trade, or maybe we'll start revenge trading and changing what we do, or moving our stop up when structurally we shouldn't. We change because we are controlled by our emotions. Casinos are not attached to the outcome of any one hand, but we are attached. How do you get control over that? You get control, in my opinion, by knowing where your edge lies. So you only play games that have an edge. And if you have to sit and wait all day for your game to show up, that is your job. This is a job. It is business. Do you want to be in business? You don't make it up. You prepare, you anticipate, and then you participate. And the outcome is random. This is Trader Lab. And it's pretty different, I think, than what most individuals think. trading is. So let's go take a look. We come down. This is excess. They blow everybody out. Thanks for playing. There's a stop sweep, and there is absorption. Now, I see this, and I think it's going to zero. I'm just telling you, what do I know? But I know this is my next statistic, and I know the ETH low is possible. And then we come back inside. So now, let's take a look. Now, these are structured trades. I'm going to just stay to structured trades in TraderLab. So we come outside. Now, I'm going to take you into microstructure. Now, this can be advanced, but I just want you to see how you might do this. 700 sell stops come out, by the way. Thanks for playing. This is when the broker sends you a gift basket. Another 350 come out here. You got 1,000 stops coming out here. Lovely. And absorption on the other side. So if you were sitting long and you took a stop, they might call you up in about a week and tell you got filled down here someplace. Only kidding. But the fact is, this is why I just let it go. I have been through these kinds of things, and not even the reports that you know about, things like Desert Storm, 911, all this kind of stuff I've been through. Falkland Islands in 1982. You remember that? Argentina and Great Britain, and a lot more. So I've been through this kind of stuff, whether you know it's coming or not. So the ones I know about, I leave that for somebody else. There's just so many trades. Because what's the first job as a trader? Risk management. It doesn't matter. You got to be here. Because things do go bump in the night. So let's take a look. So this is our retail price from the ETH. So this was, and this is really, this thing over here is excess. This is just report and blow everybody out. Thanks for playing. So now I'm going, well, now what? And that's really what I'm thinking. Now what? But I know the higher time frame trend is up. Is it over? Well, what did I do? I came into the range. This is the low right here. Settlement is here. And I come back outside. Once I come back outside a range, I'm looking. Now, here's microstructure. I'm going to take you now down into the subatomic level. This volume down here, now I can't do anything with this, but what do I know? There was a buyer here, limit order, that absorbed, that was sitting in the book. Where do we come back here? This is micro high volume right here, right there. What it is showing me is I had absorption here, and again, no clue, and I come back and test it. So right here, I'm going, that's exactly how my brain is going, because I'm conflicted over here, but I have a location here. So it's a high volume node created by, here, let me show you. I'm going to take you a little bit further here. So let's look down here. Right there is a little node. I can't do anything with this, okay? Nada, zippo. So it comes down, and right here I know there was absorption, so I have to watch this area. I'd love to tell you I'm clairvoyant, but still waiting on that. So here's my volume here. Now I come here, I break high. I see this, and I pull back. This is a trigger in the TraderLab. Alignment and this. Now I'm going to tell you, not me, no guts, okay? No guts. So, but I see the trigger. So I'm going, okay, I see a buyer. I see a test of the high volume. This is my first indication based on volume that these sellers right here are trapped. You see, we had sellers down here, and I don't know. I see the buyer here. I still don't know. So you have sellers in this leg. You got these guys here selling in the hole, and it looks like we're going to zero. So, but I have now high volume. So I don't know, and this is my high volume, the next leg up. Let's look at the next level. High volume, seller, pull back to the volume, which is in here against this, still is short. Volume here, sellers here. If I can't get above this, then potential to continue. Let's look at the change. Microstructure. Now I know I have this, and at the moment I have this. So consider this resistance right there, high volume, which is created by this consolidation. There are buy stops above here. We know that, right? And there's maybe stops under here and under here. So these guys, these buyers, they got thrown under the bus, 144 stops, and no clue. This is where it changes, and I still don't know because I have to clear the. Think of this like distributions or consolidations. Outside edge, outside edge. If I can't get through here, these guys go under the bus. If I hold this, these guys are under the bus. If I clear this, I now want to get long. Watch. My volume is here. My volume is here. Chop, chop, fight right here. Here's the volume. Test. Now, this is where the triggers are coming in. Volume now is here. So volume here, too low, no clue. Volume here, too high. Break high. Now there's buy stops here. Now what? This, the old thing, resistance becomes support. And even if you're not doing anything, break high. Where's my volume? Here. Long. Trader Lab. And then you're going for this. So far. How we doing so far? I'm just trying to show you the long off the bottom, and then there is more. $35 was the target, and liquidity was resting here. So this was a target. Let me try to show it to you here. This is where my last trade was, right here. So, and I posted this in Trader Lab. It's not a short. It's just I'll see you later. Questions? Is there a resting orders in the order book, for example, 35.17 at 200 showing? Yeah. Do the buyers have to come in and buy all 200? Yeah, it does. So if you've got liquidity in the book, you've got passive sellers. Those are limit orders. So if you come up to any price, like here, let's look at 35. It's a great example. This is resting in the book since before RTH. You see it? So when I was looking at this, I said, well, if I get my long, this is retail, and then this is resting. Now remember, we are on a higher time frame bullish, and we are anticipating potentially the all-time high being taken out at some point, whenever. You know, it's not our job to predict that. So right here, as the market is coming up, you see these, we have our buyers, that's aggressive buyers. Now there's buy stops, remember delta. So I'm seeing selling. So when you see this liquidity in the book, especially the 35, so for me, my exit was ahead of this. So that was okay for me. Okay. And if I had more runners, don't forget, all-time high. This is the RTH all-time high. There's a ETH high up here someplace too. So that was it for me. Then this is resistance. So let's look at it from that angle and post your questions. And thanks for the question. If you're in YouTube, remember there's a delay. So you notice we come back here, buyers, and this now is resistance. So let's look at this. This is your high volume. There. This right here, buyers got absorbed. Resistance. We pull back. Where is our support? Last area, chop, 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 was here. So it would be the top of this. There's your high volume. You pull out here. Now, this is how this would work. Now, again, this is a little bit more advanced. And actually, what time is it? Oh, I have a trade I forgot to mention to you here. Gotta tell you about this one. 9:30 Central Time. I forgot all about this. I want to go into it because I took a stop on this one. Got to tell you the good. What do they say? The good, the bad, and the ugly. So at 9:30, the first hour's high, wherever the first hour's high is, which is right here. Let me make sure I got my ducks, as they say, in alignment. Is my IB high wrong? 9:30. Oh, okay. First hour's high is here, and the opening swing high. That's why I couldn't find it. So if we take the first hour's high out, it sets up something called the IB continuation trade. This is a structured trade in TraderLab. This is the long. I took this. Very excited. It had alignment. We pulled outside. This is a structured trade. Back here, and we're going for this. 34, 35, and wherever. So this is a long. There's your absorption. I got long here, and then I'm looking for this. And then we had, so it started out feeling good, you know, fantasies of ribeyes, and then we get this. Took me out of the trade, so I took a stop. And that's when you start talking to the monitor and have a few other words. So I said, okay, what was this? Actually, where was it? Here, it was this. Let me just make sure I got my time right here. Long. Yeah, I think this was the stop. Yeah, I have to look. Sorry, guys, I get kind of mixed up here with this stuff. Bang, rip. Pull back here. I know I got stopped twice here. Me. And then I got long and, on my merry way. I took 2 stops in here. And I was getting a bit wondering about if I was getting a little FOMO-ish here. So I took a long continuation trade, got blown out here, put it back on again, got whacked over here, put it back on again, and, then fine. Okay. Going for 35. That's what it was. Okay. So I had that also. And then I think, well, for me, that was the last trade. Now there's another trade here, this one. Now I'm going to show you this one. And then I'm going to come up for oxygen because I need some oxygen. Hold on a second, guys. Sorry. Okay, so this is another long. I'm going to show it to you. Remember the 35, right? So this was, where I got out of my trade. Pull back. Now there's another situation here that you can use. 2 ways to play this. You could be getting long here, or when we break the 35 and pull back, it comes back in. Okay? So at 35, this area out here is also a potential long. Let me show you why. This is all structured trading and TraderLab. When you break through this, and this is another target, 40. You see they came in the book. It pulls out. Now let's look at what we see. We see a couple pieces. This structure, let me come back here so you can see what it looks like. So right here, we know about this thing. You break above it, it becomes, if we return, it becomes potentially support. Here's another piece. This volume here which was represented by what happened over here, is now retail. Okay? In other words, the fair price in the fractal, remember, and it looks like this with the high volume right there. And there's where all that action took place right there. That's the delta. So we break away from it. That is saying now there's buying above here, even though we had this selling going on and all these icebergs go off, there's demand still. And the other part was when we got above it, they didn't throw an obstacle up. You know, it isn't like they showed up again and smashed it. Didn't happen. So now I'm thinking, okay, I want to get long again. Now I'm thinking it, but I can't trade it because I'm not able to. So, because of the string. So they come back in. I have absorption here. Sellers are trapped here. Where's my buyers? Here. Where's my outside edge? Here. This is called mean reversion. What mean reversion is outside in trading. So when I talk about time frames, which I don't, I talk about fractals, but they're interchangeable, except there's no clock involved in a fractal. It's just participant based. It's not clock based. The clock is just something we created. It doesn't regulate how participants operate when they interact with each other. So I don't use the clock because it distorts. Am I waiting for a 5-minute bar or something? No, I'm not. Or candle, I guess. I started trading. We didn't have candles. That was a bar. Now we just go to the bar after trading, which we used to do back at the exchange, especially on Fridays. I got to tell you, Friday, we would leave 3 o'clock and we'd go out for steaks and cocktails. The only downside to that was I'd be getting home around 8 o'clock or so or 9. Everybody else is heading out for the evening on a Friday. I was done. That will tell you something. So right here we have microstructure, pullback. This comes into the book, absorption. These guys, these sellers are trapped. Outside edge, mean reversion. That's the mean. So if you get long, this is just structure, you need to be thinking, and we're in an uptrend, right? You got to be thinking about this for scaling against this, and then you hold and you manage your trade. So let's look. And this is your, I would have my stop under here. I'm just saying, just me. Why? Because we're above where the sellers were. So I look at this as support. So do I put my stop here? No, I don't. Why? Because there's going to be stops under here, and I don't want to be close to these guys. They come out here. Now, if you didn't get long here, you see the sellers trapped here. You see a buying iceberg. You see the 32 sell stops. Thanks for playing. Your stop should be under here, and it's still a long again. It's still mean reversion. It's outside in trading. Outside in trading. Rotational trading. It's a different configuration, but what you're doing is you're only taking longs. Subject to your plan and time frame. These counter rotations are opportunities to get on the long side as long as you're in alignment and we don't violate the structure. Let me see if I can get this over here. Liquidity comes into the book. So what do you do with this? How do you do this? How do you manage a trade? Let me give you some ideas. So first of all, you got to get risk neutral. Now you're coming up here. It looks like it's going to the moon, right? What do we see on the way up? Absorption, absorption, absorption. Now where's the high? Wouldn't I like to know? I have to tell you, no clue. So the only way I can deal with something like this, now I am looking for, this is the RTH all-time high, and I know there's an ETH one up here. Here, the ETH all-time high. So this is a target, this is a target or not, So we don't know. So I don't pick the high or the low. And the reason I don't is I don't have any skills for predicting anything. So early on when I was learning to trade, I took a course at the CME, and it was classical bar charting, which is measured moves primarily, right? Head and shoulders, all that kind of jazz, flags, pennants, the rest of it, triangles. I thought that's what we were supposed to do. So I spent a long time building out with a psychological idea that we can predict where the market is going. And that's all wrapped into our need to be right. I see we have selling coming in here now. So right here, sellers are trapped here. Okay, so we have our buyers here, seller trapped here, high volume, break high. So this is support, rotation, support. And you got a seller stuck over here. Okay, we'll send you a gift basket. Now, pull back to where the volume here. My stop is under here. Sellers are stuck here. Now, I don't know. This could just go straight down. So my stop is under here. Buyers above here. These sellers are stuck. They were absorbed. So what does this mean? When you see delta like this and it doesn't continue, there's somebody on the other side, and that's the limit order book. You don't see the limit order book because it's passive. You only see aggressors in delta. In other words, what's an aggressor? An initiator and stops. So these sellers, either we have shorts in this leg and sell stops. So that's what creates the delta. But in these sell stops or sellers, if we get the delta and we don't continue, then it might mean, and underline the term might, that they're trapped. Now I get my buyers. Looking good, Lewis. Now my stop is under here. I mean, I'm just giving you an idea. It doesn't have to be. Your stop could be wherever you want it to be, subject to your plan. I kind of just manage the trade and just let the chips fall. I can always get back in. So I see a lot of absorption. Notice the absorption. I have buy stops coming out. I have a selling iceberg. Now, there's no way to know that this might be the current high of the day. At least if you know, DM me. We'll talk. But I have no clue. So I know the last place was here. So I get my absorption. Now, when I'm seeing the absorption, I'm on alert. I also had absorption here. See the behavior? So, but where was the last volume? It was here. So this is what helps me. Now, if I was using this and I tucked up under here, I'd be getting it taken out right here. It's all up to you. That's what I'm saying is you've got to decide based on the harmonics, which is the rotations, how far back, or ATR, subject in your time frame, how far back. And there's a lot of ways you can figure this out. How do you get the answer, right? Now, the thing about the market is volatility and all this stuff varies by time of day and conditions. Right now we're in party time, so we're going to have more volatility. There's other times when we compress, typically over lunchtime, central time zone. We used to all the guys on the floor, we used to all go to lunch, and the liquidity would dry up. And today it's the same. Of course, we don't have locals anymore, but basically what happens is if you look at the volume across the RTH session, you'll see the first hour and last hour. And that's why they call 2 p.m. Central Time, or wherever your time zone is, power hour. And we have Slaughterazi in the Bookmap Discord Trade IPO, which lets us know when power hour is. So because the volume increases and we can get positioning by the banks, that have to do their business, or market makers, they have certain times and they want to, if you're moving size, you're going to do it when there's a lot of liquidity so you don't disrupt the market. There's a lot more to that, but over lunch, the point I want to make is when the liquidity dries up, think of liquidity like pebbles in a street. When there's less liquidity, there's less resistance to movement. So you have lower amounts of limit orders in the book. So they're going to gobble up those. And I'm just a little sidebar on volume and how it affects rotations. Anyway, back to this. So you'd be trailing and, so for me, my last stop would be here. This, who knows, going north. These guys, they're going to be stuck. I got to take this out to move my stop. and you'll see I'd be taken out. And that'd be the end of the long. From here, that's okay. I can live with that. Now let's see what we're doing here. Okay, now we're in real time. I'm going to check your questions. This is an outside edge down here. This is your support around 35. We've got, and I don't walk and chew gum very well, so multitasking's not my thing. Now we're in a consolidation and a chop. We want to watch this behavior. Sellers are trapped right here. They were absorbed. Doesn't mean it won't go lower. Let's look a little further. We have a swing here. There's stops here. And this is an outside edge. So if we come out here or not in this area, then the possibility is to mean revert, come here. This is not a trade recommendation, and potentially come out here. This now is a consolidation. The market tends to get directional and then rest. And the configuration changes as a day trader. We are going from directional to consolidation, and this is called mean reversion. It's outside in trading. And this is the mean. So you need range. However, longs only for me. So the way I tend to look at this, and I'll look at your questions, is if I see a short, it's an exit. If I see a long, it's get on the bus, put on a helmet. That's all I can say about it. So we'll see how this one goes. Okay, this is not a trade recommendation. This is called mean reversion. Questions, guys? Thanks for your patience. So how we doing? How's everybody? Thumb up in YouTube. You're finding this interesting, educational, and you're all invited to the Bookmap Discord Trader Lab chat. Take advantage of the 60 PDFs of these structured trades that I'm narrating here. And there's a lot more. Statistical probabilities that you have to vet. The 60 PDFs of structured trades are for you to pick one, and you ask the participants in Trader Lab which ones they like, because it's really, the business of trading is kind of like building out a template. How do you do this? You start with one so you can prove to yourself you have a statistical edge. If you knew, even though you don't know the outcome of the next trade, that you had an edge, how does that impact you as a developing trader looking to build a career in trading? If you understood what this is, would that make a difference to you? And you have to acknowledge it doesn't mean that if you got long here in this structure, which is a structured trade, and it's a little more advanced concept, that you wouldn't take a stop. The casinos deal the cards not knowing what's coming out of the deck and how the gamblers play. But you know what? They know that if they keep dealing the cards the same way, because they know the games that they play have an edge, they don't make up the games. They just keep dealing the cards. And they can afford to give you the cocktail, the ticket to the buffet, maybe comp your room, have the limo pick you up, send you the fruit basket, and tickets to Adele. Pay the gamblers and still build larger casinos. Is that something that maybe can motivate you to say, well, maybe this is not a business of indicators, but it's a business of understanding how the market works, why it does what it does, and in Trader Lab, how you might get in alignment with it, accepting that you're in a random environment. The only control you have is yourself. And how do you gain control over yourself in your games, if you will, or your trades? By doing the work, one structured trade at a time. And if you're interested, you can become part of the Trader Lab community in the Bookmap Discord Trader Lab chat. Take advantage of all the no-cost education. There's no cost to be part of Trader Lab. And participate in the community so you can leverage your experience. We all operate in many ways in a vacuum. Nobody understands this business unless you're in it. We come into the business with a fantasy of what we think it is. We get a toolbox of canned indicators, and we spend the rest of our lives with time frames and trying to load more indicators to create what? More certainty. How about can you accept there is no certainty? And if there is no certainty, then what is there? There is probabilities. Do you know what the probability is of getting long here? If you don't, then you're the gambler. And here's the thing that's so challenging for us. The gamblers win. I call it Trader Groundhog Day because we're constantly tuning, tweaking, trying to fit our indicators to the condition of the market. The thing that's problematic is the condition of the market is not static, but our indicators really are, if you think about it, because we're curve fitting them. So we win. And that makes us think we're doing, quote, the right thing. Now, maybe it's right for you. But for me, I found, and I did this with trading systems that I built because I was managing a lot of assets across, and it was commodities we used to call them, now it's futures. But, currencies, and I was a trend follower and a swing trader, so there was no day trading. But you did initiate in the day time frame, right? So everybody says, I don't want to be a scalper. Well, no, I'm not a scalper. I don't want to scalp. I get paid for the larger rotations, but I have to have a scalping mentality for triggers. This is microstructure. So if I understand this behavior, I know I can get long. And I know I fail under here. So that's all I can tell you. So this is a Trader Lab long. Hope you're finding this interesting. Remember, I don't call trades, but I like to point out things you can observe. And if you're in YouTube, remember, there's a link in the bottom of YouTube so you can visit Trader Lab, join the community if you choose. But here's the thing. You need to ask in the Trader Lab if the current participants in Trader Lab were able to start over in Trader Lab, what would they do differently? You want to learn, and we learn from each other in Trader Lab. We're all working to get better. I've been doing this going on 45 years. I'm still working on stuff. I'm still researching ideas. I'm still testing concepts. It's a wonderful business, but you got to survive. So maybe come to Trader Lab, locate an edge, and then develop the confidence to control your emotional states. The only way I have found for me not to jump out the window with the randomness is to have metrics that make this random behavior tangible. Because if I know I have a probability of getting risk neutral, it gives me courage to manage the lunatic. And the lunatic is our primal wiring to avoid the saber-toothed tiger. That's done great for us. Run out of the burning building. You know what I mean? However, and we're wired for that, and it's great for survival. Not so much in trading, where we're running into the building, where we're taking risk, where we're grabbing the saber-toothed tiger by the tail. And those emotional states, which are wiring and are primal, will disrupt our intention. That's why you bail out when it's coming back towards your stop. That's why you move your stop when you shouldn't, because the trade doesn't fail. This is why when you see a little counter rotation, you blow out and then the trade continues. If you're in Trader Lab, your goal and your job is to find a way to overcome that. And that's what Trader Lab's about. And of course, past performance is not indicative of future results. And then it's how do you use a high tier tool like Bookmap? This is granular. So all the other pieces, the auction, the locations, all of that is built on a chassis. I call this a chassis. And there's a library of webinars. And then, again, all this is available at no cost. And I would suggest you start with the primer. The primer is a high-level overview of this process and the business of trading. It's about an hour long. And it's got about 29,000 views. So I think it's kind of popular, And so you guys know I am not a vendor. There's no course. It's a community. I mean, this is not what I do, What I do is the same thing you do. So I and I trade ETH in the morning, and then I need a break because my brain turns into flubber. You remember flubber? Maybe not. So I get tired. So my cognitive, my skills, and my ability to concentrate because of fatigue starts going down. So I know that about myself. Why? I have statistics. Now, this is a trade I would take right here because it's part of my structured trades, and it is in TraderLab. But, and I can see this and I could trade it, but fatigue does catch up. And if you keep metrics, you will find some very interesting things. You will find there's times of the day where your edge drops down. Some of that has to do with the volume. If the volume drops down, the rotations can compress. Do you know where you start losing your edge? Do you know which conditions of the market where you don't do well? If you guys remember yesterday, it was two-sided trade. We were in something called mean reversion, which is outside in trading. And if you remember the stream yesterday, I was taking longs and managing and getting out of the shorts. You could have been trading it from both sides, but the trend is up. So in my world, I can take shorts, but in this condition, remember at the beginning of the stream, I said responsive selling. So shorts were fine, or skip the shorts, just take the longs because you're aligned with the trend. All this is plan specific. And in TraderLab, you can be doing any of it or both of them, all subject to your skill sets. Questions, guys? How are we doing? Please give a thumb up in YouTube. And remember, if you're in YouTube, there's the link in the bottom so you can visit the Bookmap Discord TraderLab chat. There's no cost. You know, all these subscription deals, out there, everybody's an expert. Well, maybe. But I don't see why you need to subscribe to anything unless, of course, it makes sense for you. But the TraderLab, no cost. And then there's a lot of additional education available in the Bookmap Discord chat. Large cap, small cap stocks, of course, order flow with a high tier tool like Bookmap, how to look right here and know. How would you know what's going on here? I see the absorption. Would you know that by looking at a candle? I don't think so. Would you know that these sellers are trapped because they were absorbed? You wouldn't know that. Does that help me execute in a timely fashion? Yeah, it does. That's why I have an order flow tool. Because I cannot, this is all algorithmic behavior here in the limit order book. Computers, you can't compete. I can't read this. Back in the day, before we had algos and we had locals on the floor, you could do something with level 2, with the limit book. You could see behavior. Now it's just computers. Well, I can't do anything with that. I know where this might come in because I can see it. It's resting. And now I can see this. This is why I'm long. Is this making sense? And please give a thumb up in YouTube. This is TraderLab. And you're all invited to visit. By the way, if you in the Bookmap Discord TraderLab, congratulations to all of you that are passing your evaluations in those funded prop programs using the TraderLab structured trades. I guess that's good, right? And of course, I always have to say, past performance not indicative of future results. Your mileage, as they say, may vary. So this is the last long in TraderLab. Anybody get long in TraderLab here on this structured trade? Yeah, you're welcome. Yeah, how about a thumbs up, guys? And by the way, these streams are available exclusively to Bookmap Discord TraderLab participants to reverse engineer, review, screenshots, circle arrows. And in the TraderLab, traders post their trades. When they work, when they don't work. They debate ideas. Other traders bring their ideas. It's a community. the key to the community and the reason Bookmap asked me to do this is because I was posting ideas in a chat a number of years ago, and a lot of traders started asking me, what are you doing? And of course, I ask myself at times, what am I doing? But the fact is, I've been doing this a long time, and I found what didn't work. And what didn't work, I was trying to get to work. It was like just more persistence, just maybe a little, And I shared an office with George Lane. He created stochastics, an oscillator, right? This before I think it was before CCI and MACDs, all that. Early. So I got, you might say, enthralled with oscillators, RSIs, divergence, the typical stuff. And then I started building trading systems, complex processes that were conditional. I actually did beta testing for what became TradeStation with Ralph and Bill Cruz. They were down in Miami, Omega Research, right? So I was using that. And when I first started working with, quote, easy language, and I wanted to shoot myself, it was an end-of-day product. So, because I was remember, I was trend following. So I started building systems. And then even though real-time data was, you could not get real-time data, I would buy 15-minute data, very expensive, on floppy disks. Remember those? No, probably you don't. And then run an end-of-day product or program on 15-minute bars. So the program would think that every 15 minutes was an end of day. So I was trying to drill in. I'm just giving you a little background. So, and that was in 1985, 86, 87, somewhere, maybe. I don't know. And then I got introduced to market profile, and I learned that from Peter Stottlemyre at the CBOT. He created it. So that's a little bit about me. And that doesn't mean that I didn't suffer greatly, because I did. And the reason I suffered was I thought the business was really indicator driven. And at the time, I thought I could systematize it and optimize it. So I was on the right track, but I didn't understand it was a gaming business. So I was kind of pushing and persisting in a direction that would continually break down. And that's what Trader Groundhog Day is. And we all do it, or have done it. I don't do it anymore, but we all do it with our indicators, whether it's systematized or you're eyeballing it and tweaking whatever it is. You're moving average, you're moving your trend line, and we tend to pile more stuff on, and it's because, and that creates randomness. You can't measure randomness. You can look at a P&L, but the thing you're going to find is, yeah, you have winners and losers. But over time, which side of the table are you sitting on? Are you with the gamblers, or are you sitting with the house? Once I understood that this is random, I think that's a nice long. What do you guys think? I changed what I did, and everything changed. It took a while, longer. So now there was no education when I started out. You buy a book. There was no internet. We had no computers. My first computer was an Apple IIe, and I'd say primitive is an understatement, but that was high tech back in the day. Questions? And how we doing? Thumb up in YouTube, and remember the link in the bottom of YouTube if you want to visit Trader Lab. The community has no cost. The resource is no cost. Structured trades, no cost. Library of webinars to see what this is all about, no cost. To me, the most important part of all of it is the community. And I've never seen a community as good as this one. I'm sure they're out there. I just haven't seen them. Because if you're in this community, it's because you're determined, and you'll do whatever it takes to overcome the challenges of operating in randomness. And it starts with vetting structured trades. When you have a statistical probability, you'd be surprised what that means. Instead of just being controlled by your emotions, now you have a tangible asset, just like the casinos have a game that gives them an edge. When you know you have an edge and you have the discipline to execute the edge, and accept the random outcome, just like the casinos, things change. You're going to feel the same emotions, the fear, but you're going to be able to look at that setup that you have circles, arrows, where you have examples of it. You'll open your trade plan to the specific setup. You'll know where it shows up. You'll know what you're looking for. You'll know the structure. You'll have examples of the triggers, and you'll know that even though you can get stopped out on any trade, that over a large sample size, you have an edge. You're not going to make up the trades. You're not going to impulse in. This is what the business of trading is. It is not a video game, unless, of course, you want to play a video game, and then that's fine. But the Trader Lab is about the business of trading, and then using tools to give you an edge and to find out where this edge might lie in multiple time frames and fractals, using a high-tier tool like Bookmap to see inside the behavior. Sellers were here. There was absorption. You see it? Sellers were here. There was absorption. 450 icebergs bought. They were right there. The sell stops were absorbed by the buyers. Can you see that with a candle? No, you can't. So what do I know? I know. Now here's my volume. Sellers are here, suspect. Buyers here. What's going on? Absorption. Break high. Trigger. Where's the volume? Here. Look here. There. Where do I get long? Here. Where does my stop go? Under here. And then, wherever. And wherever, clueless. Look where this is. Huh. What a coincidence. 500 sitting up here. So where would my target be? Not a recommendation. Up in front of this. And it's just one, I'm okay with that. 10 points, 8 points, plus scales. Are you guys okay with that? And remember, past performance not indicative of future results. Please give a thumb up in YouTube if you're finding this interesting. And remember, you guys can review this stream if you're in the Bookmap Discord Trader Lab community, and there's no cost for you. But some of these resources are exclusive to the community. When something is no cost, I think, I decided to make this a little more exclusive because it's kind of a two-way street. Bring your experience to the Trader Lab. And the point is, we all have the same experience. Would it make sense to find out that we are all the same as you? The thing that's different is that we learn from what we do. We don't keep repeating if it doesn't work. We believe we can fix it by working harder. That's what I believed for years. But what I found was it had nothing to do with my effort or intention. It had to do with that my process was not aligned with the business. That's where it broke down. And you can find out more about that in Trader Lab. So let's look at this thing. Sellers are here. Sellers are here. Micro high volume here. Buyer is stuck here. Buyer is here. Exhaustion. Now, if I don't get back above here, counter rotation. That's as deep as this gets. Now, let's look in the micro structure. Outside edges here. So you could be trailing here. Now, for me, if it doesn't get here, doesn't matter. Now, here's the other piece, and this is where you, as an individual, create your own trade plan. What time frame are you operating in? I use the term time. Are you sitting with your stop under here and you went to the gym? We have a trader in Trader Lab that kind of does that. And you're just going for the moon? Or are you more fractally oriented and you're managing your trade and you let yourself get taken out and you're okay with it? Because this is your time frame, you see. You know the answer. If you're going, I don't know, I want it all, I want to stay in and get more, how might you do that? How about a sequential trade management process in multiple time frames? Now, in the Trader Lab, and again, you have to vet this, I always suggest you start with a 2-lot minimum configuration to learn risk management and to get risk neutral. The job of the first contract is to buy the stop on the runner, because, and it's not that you should be trading live. What you should be doing, in my opinion, is first of all study one setup, and there's 60 PDFs of these things. You can, not 60 setups, 60 PDFs. I'll show them to you towards the end of the stream. You pick one and you say, okay, I'm going to become an expert at this thing. I'm going to make it my trade slate. 1. Now everybody's in a hurry. They do 5. That's FOMO. You do 5, you're going to spend months wasting your time. You need to do 1 to prove to yourself that you can actually do this and develop an edge. The scaling part buys the stop so that if you get taken out, you scratch. So that's number 1. And then as you understand, part of developing this, 1, is it has to be in alignment with something called context. So you will also be learning market mechanics all in one structured trade. So you're going to accomplish a lot. You'll also understand that once you have 1, because you've done the work, and I'm underlining the word work, to build a career. Think about if you want to be a physician or be on a professional sports team. You don't just walk in and, no, you got to do the work. Not ready to work, then you don't need Trader Lab. Then you need something else to do with your time. If you want to be in the business of trading, you got to roll your sleeves up and maybe become a little humble and admit to yourself if it's not working, it has nothing to do with your effort. It might have to do with your process. And that's why the casinos are successful. They're not predicting the next hand. Somehow we think that we can predict what's going to happen. I know I can't. So this trade would be over for me, even though I think it may go higher. And it doesn't have to. What else do I know? Lunchtime. What happens over lunchtime? If you remember, potentially, volume drops off. So potentially we might get more counter rotation. Now here's another piece. If I micromanage, I'll be out of the trade and it could go up another 20 points. Am I okay with that? And what was I mentioning? Maybe I trade in multiple time frames. So I have a scale to get risk neutral. I have a higher time frame runner that the stop stays here and I don't move it. And I then take another one out here, and I've got one left for the Hail Mary pass. And if the higher time frame one gets taken out, then that's fine. So what's the answer? The answer lies in the work. So you start with 2, then you go to 3, or increments. So you could be doing 2 2s, 3 2s. So 3 3 3 3. Never go beyond 2. You just can do more of the same sequence, or you add a runner, and that one's managed differently. It's a higher time frame, so you get more MFE and you give more back. It's a way to kind of break it into pieces. Please give a thumb up if this is useful. I hope you're getting something out of this if you're in YouTube. And remember the link in the bottom of YouTube. You can all come to Trader Lab, join the community. There's no cost, and there's a lot of additional education, stocks, options, crypto, order flow with a high tier tool like Bookmap. And there's a lot of tools available too in the product. In the Trader Lab, I have streams in there in the library of webinars that are up to 5 hours of real-time narration. Some of it pretty wild and woolly, and trend days and then rotational days that change in the trend and then go into counter, all kinds of wild stuff. And it's all structured trading. So like this, this long, this is just structured trade. Not too complicated, is it? So if you're micromanaging, you might be out of 2. And then you might have 1 that's long-term, and that's your runner. Or you trade 1 And you have another one where your stop's under here and you go to the gym and you just let it go to a target. But that might mean emotionally, that might be more problematic. If I trade, actually, when I trade multiples, and I don't always trade a lot, I mean, sometimes I just trade twos. And the reason is if I have a target, now here the target is north, it's undefined, but pretty much. I mean, this, notice the liquidity, and it's a strike. And there's nothing sitting up here, so who knows? Let's see if there's anything else in the order book sitting. Nope. So now they can always put stuff in the book, right? So this is the ETH high. This is where the liquidity is currently sitting. And it's not very large, but you could see it came in. So we can anticipate iceberg selling in here. There's the absorption. So let's watch. So the link, so you know, and I'm starting to mention what's available. Stocks, options, crypto, market maker behavior, order flow with a high tier tool like Bookmap, algorithmic behavior, options, a lot. And of course, Trader Lab. And I invite you to visit. Links in the bottom of YouTube. Also, if you find this interesting today, please give a thumb up. And you're all invited to visit Trader Lab, whether it's in the Bookmap Discord Trader Lab or subscribe to this channel so you get notification when there's something going on. And if you're interested, visit. Let's watch. And if you have any questions, I've got about 9 minutes left before they pull the plug. Notice the selling icebergs executing here. This is what an order flow tool can do. Now, the fact they're selling is not a short. What we want to see is these buyers, do they absorb these guys, or this is a limit, right? Or do these limits, the passive side, absorb the buyers and we run out of buyers? Here, you can see the buyers absorb the sellers in this liquidity. Now we have the buyers here interacting with this iceberg, high of the day. And anything can happen here. That's part of the joy of trading, right? What is it? Random. So no prediction. We can get a counter rotation. We could do the Acapulco cliff dive. We can take everybody out in this leg. Let's talk about stops, by the way. Where are the stops? Under this swing. Sellers got trapped. Why didn't we go up from here? Why? Buyers trapped here. No buyer. Sellers took over. Creates a rotation. Buyers here. Did not get above these guys. Trapped, microstructure now, okay? Trapped, seller. Took the stops out under here. Thanks for playing. Send you a nice parting gift. 16 stops. Seller trapped. Buyer. We're now above the sellers. Trapped. Buyer. Seller. Trapped. Buyer. Remains to be seen. Iceberg still executing. Whoa. Are you guys with me? Now, what do we do with this? We don't know what's going to happen here. Buyers, absorption, icebergs, they're still sitting in the book. See the behavior. Now, we want to see, does he drop down and chase it? If he gets aggressive, that says something to you. Or do we rotate back, check the high of the day, and this guy's hanging out? Let's watch. Now, I'm not going to be able to hang out with you guys and we see what it does, but if you understand order flow, this is what we anticipate. Now, what happens? What is it? Random. All-time high. Do you think you might get a little profit taking ahead of this liquidity? Maybe. Would you be dissatisfied if you were out of the long? Where is it? I forgot where we got long. It's all the way down here someplace. This was our long, right? Which I narrated for you guys. Remember, I don't call trades. I take stops all the time. Doesn't bother me. Other than it does bother me. But I release that emotion by censoring what I say. But I talk to the market. Don't you? That's a release. But I know I have no control over what happens here. Do these longs take profit? Because they know this is here. If they have an order flow tool, if they don't, they just see a candle. That is such an incomplete picture, in my opinion. Final questions, and please give a thumb up in YouTube. And if you find this useful and you're interested in market mechanics, how the market works, why it does what it does, and structured trading, in other words, anticipating the trade, not making it up, only interacting when you have a statistical edge, leave the rest for the gamblers. And of course, the outcome of any trade is always random. We don't know where the rotation will come from. We don't know who's on first and what's going to happen. But we do know this. There was absorption, and I have a buyer here who hit this iceberg, and this guy still wants to execute. So, clueless. Buyers are right there. There's the delta, stuck. And then we have our sellers here. There's the delta. High volume is here. This is like shopping. So, still longs for me. I certainly will not be getting short. Currently. Why? Higher time frame is up. Do you have a trade plan? If not, I invite you to Trader Lab. Click the link in the bottom of YouTube. It doesn't cost you anything. And I make a point of that because everybody's used to paying. If you go on the internet or YouTube, everybody's got a chat room. And all you got to do is pay blank per month and you're going to become a successful trader. I'm going to suggest no such animal. Nobody can make you become a successful trader. Trader Lab cannot solve it for you. Trader Lab will give you the tools, and then you have to find your psychological alignment. There are traders who are going to buy this, sell this. There are other traders that are going to take this long and they're going to go to lunch or have a trade management process. Which one are you? And if you don't know the answer, visit Trader Lab. You'll find the answer if you do the work, persist, and follow a process that is working for other traders, which of course is no guarantee it'll work for you because it takes tenacity and you will be frustrated and you'll really think often that you won't get it and you can't do it. Now, the fact is maybe you can, maybe you can't, but at least you can be with other traders who are moving the ball forward, changing their outcomes, who are now moving from research, vetting these structured trades, to sim, to prop. They're doing prop, and the prop is a step to generate emotional states so you can put these plans and then see tangible results. And then, subject to where you go from prop, extract dollars, assuming you are successful. If you are, then use prop dollars to trade your own dollars. That's the goal of Trader Lab, to help traders build careers and to use high-tier tool like Bookmap to get an edge over other traders who don't know what's going on under the hood. Please give a thumb up in YouTube. Use that link in the bottom of YouTube if you like to visit the community in Trader Lab. There's no cost. The thing you need to do, come to Trader Lab. Download these 60 PDFs of structured trades. Watch the library of webinars. Start with the primer one. I think there's 36 of them in there. And all different time frames, configurations. When I say time frame, it's really not time, but different rotational structures so you can see how this works. We don't have to trade. We can be long here, but we can also look at structure and understand what happened here. We can understand what's happening here if we understand the auction process. We know sellers are trapped here. We know there's high volume here. We know this is a triggering structure in this process. And we know this is support. We know if we test this and we don't get these guys out, that we can have another leg up. We know in the microstructure Buyers are trapped there. And we know that microstructure is too high. There's the delta. If I can't get back over this, I can come down here. If I can hold this area, I can move up there. That's Trader Lab. Thumb up, please, in YouTube. Thanks you so much for visiting. Remember, if you're in Trader Lab, this stream is available exclusively to you to reverse engineer and review. This is what the structured trades look like, the PDFs. You can download these if you use the link in the bottom of YouTube, reverse engineer them. But the key to this is you can have these, but to understand how to unpack it, you should come to Trader Lab and ask there, what would other traders in Trader Lab start with to build out the business of trading? Thanks again, guys. Thumb up on the way out in YouTube. Appreciate you being here today, and I look forward to seeing you soon back in the Trader Lab.